From Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market during the day and how we can plan for a better trade for the next day. Right? Remember, this is analysis for April 12th, Tuesday, 2022, tomorrow. Right? So let's get into it and see. Yes, the pre-market analysis for tomorrow. It will be based on all these parameters that you see on the left side and on the right side, right? We would have data analysis, global commodity overview, and global markets view, and then wrap up also with some actionables as well, right? So here goes the chart: Nifty 50 on the left side and Banknifty on the right side. So it was a down day, bearish day, right? And it did not fall below the previous day's low, right? It was looked like it's more like a consolidation that's happening, right? Last 3 days, nothing much is happening. No, it's within a range, but with a stiff resistance on the upside. It's unable to go past this point of 17,800 levels ahead, right? After the correct retracement that happened with the big 2 days of move that happened. Banknifty, the same story. It's kind of consolidating. You see small body candles, inverted hammers, and all this. Nothing much is happening. It's within a range of below the 38,000 levels, right? Today we have an inverted hammer also. Inverted hammer normally in the bottom of a trend or the beginning of it or the top of a trend, it makes sense, but here this may not mean anything more than the selling pressure that the big size indicates is what you make out of the inverted hammer on the Banknifty, right? So let's get into details. 0.6% down today, another 100 points lost, 110 points nearly. And it's a bearish candle, but it's the main thing is it slipped below the gap support. There's a gap support here for the previous gap of the big two green candles that it lost that gap support, right? It got covered basically, but the gap on the Banknifty is still there. So, but still it's comfortably above all the moving averages, right? I have a 20, 200, 50, 100 all. So both indices are above the 200. All the major confluence of the moving average, it's much above that. Fibonacci 61. Is lost in the Banknifty, but Nifty is still comfortably above the Fibonacci 51, but it lost the gap support that you see here. Right? Actually, the Banknifty thing is it's kind of inverted hammer, but it's, if we have a closer look, there is a small wick on it down also, so it can be a indecisive, doji candle also, right? It looks like a doji if you look at the candle on this chart, The body is very small and we have very long wick, and there is a wick on the bottom side also, so it looks more like a indecisive gravestone doji candle, which is kind of bearish. That's why I put it as doji instead of inverted hammer, right? So it's also comfortably above the gap support as well as the moving average confluences of 20, 50, 100, all those, but Fibonacci 61 is low. So Nifty lost the gap support, Banknifty lost the Fibonacci 61 resistance the other day, so, but still at a very good support level, kind of consolidation is what we are seeing. Intraday it was volatile, but volatile within a small range of 100 and 200 points in Nifty and Banknifty respectively. Since this is still in the support zone, if you look at back, you can see previous places where resistance were seen, and it's still at the same place. Still seeing the price is still taking a support at the previous resistance zone, so there could still be a change in polarity bounce that can happen. It already happened 2 days back, but it not sustained further to move ahead. So sometimes change in polarity can take 1 or 2 or 3 multiple times consolidation at this previous resistance zone, and then it can bounce up. So it's still a possibility to do for that change in polarity bounce up to happen on both the indices. And Banknifty also, it's also a resistance zone which is taken as a support now. Now Bollinger Bands saying the same thing, right? Look at Bollinger Bands, right? It's very volatile, right? Banknifty also volatile because the distance from the median to upper and lower bands are high, but bullish bias because price is above, and also the expansion on the top side has happened. But there is a small pause that has happened now. Because we can see a bend on the expansion has happened now on indices both, right? But still it's upward bias is what Bollinger Bands is saying with high volatile indications, right? So Bollinger Bands is saying that, and support resistance levels, if you see the current support is at 7,500, 7,600 Fibonacci level, Below that you have 7350 to 7400. If that's lost, you go to 7200, same zone. Below that you have very good support at 17,000, which is the previous, it's a gap support, right? If that loses, you go to the 16,800, 16,900. It's another Fibonacci level. On the upside, the resistance will be 17,800, 850, which is a thing that it has to clear now immediately, right? Then you have the 18,000 rounding number level, so which above that we have 18,100, 18,200, 18,300, 400 range, right? That's the resistance support on the Nifty. Banknifty we see 37,300, 37,500. Fibonacci 23 retracement level is the current support where it is there, where the doji is formed. Upside I have resistance at 37,800 levels. Above that you have 38,000 kind of levels resistance, and then above that you have 38,500, which is very crucial because it's a swing high. So as I say, closing above 38,500 and 18,350 is crucial, so that lower low pattern does not get formed, right? So if it moves up, then we can be more confidently say that this market is lining up again to clear, to make a new high. Until then, there is some uncertainty, from the price actions that we see. Momentum, there was a small reverse momentum divergence, right? That is nullified, negated, did not happen. It died out after a small up move. That's on the Nifty. In Banknifty didn't have anything. So basically what has happened is momentum has slipped to the sideways and it is resisting near the bullish zones of RSI 60. Same is happening in Banknifty. So that's why there is momentum resistance currently in the market. But momentum is very close to the bullish zones, but actively technically in the sideways zones. So that is what is happening, sideways momentum, and medium term also it's a sideways. Weekly charts also we see both indices are sideways. So momentum is kind of resisting to sustain in the bullish zones is what is happening right now. Right? Trend remains crossed over and remains in the bullish DMI portfolios on both indices, but just trying this slightly bend, you can see that the green. But it's rising on the Banknifty. So Banknifty has got better strength than Nifty. That's what it indicates. But on weekly charts also both the trend and extended ticket is showing that it is in the DMI positive zone. So trend, nothing much has happened because it is consolidation that is happening last 3 days, right? So trend is intact. Momentum slightly resisting and slipping in the sideways bullish, like that it is moving, right? So that's about that. And volatility, if you see, it's spiked a little bit today, right? Around 3% and 18.27, 7.63 is implied volatility on the Nifty. And implied volatility percentile on the Nifty is 66.7, which is far away from the 96 kind of levels 2-3 weeks back. So not a school of below 20, it's fine, but it's still can spike back because uncertainty may be still there, right? The global cues are not that great, so we have to be cautious. Open interest analysis is showing some unwinding that is happening on the call side as well as the put side today. Right, there's unwinding on the call side here. So overall, if you see, it's more of a bearishness is what it indicates, but expiry has got 2 more days to go. It's a short week today. Right? Expiry is not on Thursday, it's on Wednesday, and the remaining 2 days are holidays. So the time TK benefits can come in, right? So trading tomorrow would be as good as trading a Wednesday, right? All right. So the levels, if you see as of now, the range remains 70,000 points apart from 17,000 and 18,000, and where the highest put and call writing is 17,700 and 18,500 is where the second level of put and call writing is happening. But 0.61 put call ratio is not that great bullish, neither it is bearish also, right? But futures open interest build up on the Nifty showing that it is long on writing, which is bearish. People are long, now thinking of short. Banknifty 37,500 to 38,000 is where the highest put and call writing resistance is seen, and 37,000 and 38,500 is where the second level of put and call writing is seen. 0.76 is not bullish enough, I would say, but it was a short build up in the futures open interest build up that happened today, right? So overall there is some not much clarity has come in, but overall it's it's a wide range support and resistance levels where the highest put and call is put, and also there is some bearish touch also seen from the data that is available as of now. It's a red day, obviously. IT didn't go well. Basically, infield didn't do well. and HDFC Twins didn't do well, Alliance didn't do well. Who else will do? Right? So do only ICC and TCS will do it. So financial services didn't do. Major sectors did not do. IT did not do well. Pharma, metals, auto, no, FMCG. All the major sectors did not do. Only energy, cement, construction. Some others did. Smaller weightage sectors did well. So index heavyweights, if you see, HDFC Bank was like, after the big, circuit breaker kind of move, it is calmed down, cooled off, and momentum also seems to be slipped to the sideways, and it's finding it difficult to sustain that very high levels. Probably it might take time to consolidate. Same with HDFC also, similar to the HDFC Bank. Momentum slipped in the sideways. It's unable to sustain it. The big up move that happened, and then profit booking still may be happening, but seems like it has come and fallen on a support zone. Right, the Banknifty, it is not even ready, ready to settle at the support zone. It has even slipped down from below that. Right. Lions was a green day today. Momentum is rising, right, very close to the bull zones, and it's a green day. Cup and handle breakout is what's happening. Volumes are not that great. Infosys down day, something wrong with the IT again. Last 3-4 days it's a down move that's happening. Today also the same. Momentum slipped to sideways and taking very close to the support zones of the RSI 40. Infosys did TCS looks like a green day, but momentum is sideways, and it still is with very slow momentum, slowly moving up and falling down and moving up. But trend overall seems to be an upside, although the momentum is very bad. ICICI Bank seems to be doing good. It has finally climbed to the bullish zones. It has taken out that major resistance and then bounced up. Last 2-3 days it's doing good. Right. Looks like it is heading towards the resistance on the upside. Kodak Mahindra Bank had a green day. Looks like it is gaining energy to take back the resistance from where it had fallen off when the big HDFC move happened. Right. So momentum is sideways for the Kodak Bank. Right. So that's what Reliance is okay doing, and ICICI Bank is doing good. Others are all like kind of struggling in the sideways zones with the resistance. Sectoral performance, if you see, it was more or less flat and down day. Now IT went down 1.4%, metal moved slightly up, but it was indecisive dodgy move that has happened, but momentum remains bullish on both the time frames, on weekly and daily. So it still can take bets, but be aware of the doji indecisiveness candle on the daily is something you have to be cautious about. So put stop losses if you're entering the metal stocks. IT is down, as I said, but momentum anyways sideways, so stay out of that. Auto also closed flat and sideways. Momentum is what you have to stay out. Pharma remains bullish, but it was a flat day for Pharma FMCG, and reality spiked up 1.1%. So Pharma FMCG reality are all bullish on the short term, but medium term you just have to wait to get confident in this, but you may take tight stop loss bets. Right? So metal, pharma, FMCG, reality still continue to be bullish on the short term, while IT is struggling and auto is in the sideways still. Right? That's the sectorial performance, and look at the data has not come in. Today's data for the FI institutional data has not come in, but today's data we can see that last 2-3 days FI is continuously selling. Other day it was less, but 2 days back it was 5,000 crores in 2000 crores. So FIs continue to remain as majorly a seller, and that continues to be there. And today also it might have been big selling from both the guys, or it may have been another effect, big selling from the FIs and small buying from the DAs. Let check that later once after a few hours from now, and then you will get it. Dollar currency pair, if you see, it's kind of so actually dollar index, if you see in the right side charts, right, you can see that it has taken out a major resistance in 99.6 and then steadily going upside with great momentum. So dollar is strengthening, dollar index as such. USD INR is kind of consolidating but spiking, and momentum is rising, and it is kind of trying to go further above and remain there above the 75 levels for sure, because a small attempt to cool down below the 75 did not succeed and just climbed back and setting. But today was a kind of small strengthening day, or last 2-3 days it is a consolidation sideways momentum. So but still it's a weekend rupee overall, if you see, with the dollar index rising. Right, and global markets, if you see, US markets, Dow Jones showing some green, green move, so it's not ready to fall back into these support zones, and seems like it was just a retracement for the last several days, and then now the momentum seems to be rising up. But that's not the case with Nasdaq, where it has fallen down and taken a support, and it's not showing much interest to move further up immediate, but momentum has slipped to the sideways. Same with S&P 500 also. So it's a green close and sideways momentum slip from the bullish zones. Retracement seems to be extending more than what the Dow Jones is doing, right? So overall some shakiness is there. No, the uptrend is not visible as of now, but no, probably some consolidation is what is happening in the US markets. So we have to be viewing this the next day morning, because overnight the trading will happen in the US market. So it makes more sense to look at the global markets, the US markets, basically how they perform the next day. Obviously it will reflect in the SGX accordingly. Crude oil is cooled off. That is the only good thing that you can see, right? It is cooled off below 100 and it's 93 kind of levels today. It's a good thing, and it seems like the momentum is heading down into take towards the support zone, and trend seems to be down, so it's well within the channel, and that's a big cool off, more than 30% probably from the top, 13-year high. So crude oil cooling off is good, but still a long way to go before we can say that it's good for markets. Gold is spiking up, is something that's not that great to watch. If there is gold spiking up, then there may be something wrong. Most of the time, we tend to look at his market falling down, right? So if the gold is spiking up back to the all-time high again, that means that people, the investors are moving towards gold. Why would investors move to gold? For some reason, obviously, right? They're pulling out the money from the equity market. So, so that's the obvious thing that may come to the mind, right? So you have to be slightly cautious, but yeah, if you're hedging operations or investing in gold, then it makes sense, and you're clearly seeing that it is trying to break out of this consolidation, and we have 3 good up move candles. Now we just have to watch whether this momentum is climbing and settling above the 60 RSI and maintaining the momentum or not. That's what we have to see. Yeah, it looks like it's heading up. 2 actionables. JSW Steel seems to be having a good breakout from the cup and handle. The parallel channel breakout can clearly visible. It is exactly at the previous resistance zone. And any move above this current candle clearly says it's going to make a big move. The only thing you have to be cautious is volumes have reduced, right? But it's increasing over a period of time. This is a weekly candle, entry would be normally made on daily, so you have to see the volume of the daily only. But there is also a price and momentum divergence, right? That is something that you have to be slightly cautious, but number of bars in the divergence is more. It's bearish divergence, but where the price is moving up and momentum is moving down, right? So, but since it's diluted, not worry too much, but something just keep note. But any up move above this resistance would because it's a resistance that is attempted 3 times to be broken out. So the third or 4th time that you are trying to break out that all-time high. So if that goes above, then it's good. So JSW could pick for swing positional trades for the next week. Hindustan Aeronautics is the second one. It's a rounding pattern. Second time it is trying to break out, and it has successfully broken out with three weeks of up move and beautiful volume and big momentum in the medium term and short term, and trend cross tower and ADX indicators is rising up. All bullishness can be seen here, but yeah, try to enter on a pullback. It makes sense to do that because it's a weekly candle. So daily time frame, whenever there is small pullback happens with tight stop loss at this neckline, you can try to get a swing long trade for this. JSW, Steel, and Hindustan Aeronautics. So wrap up, it's kind of neutral is what I feel, but there's a possibility of a change in productive bounce, and overall the trend is bullish, right? And the momentum is slightly slipped, but slight resistance to the momentum is there, but overall I feel that there is a possibility of a CIP bounce also to happen, but otherwise market is basically not doing nothing but consolidating. So it is waiting for some event to trigger the further up move, right? So it's a possibility of both. It can be can end up with the current consolidation that is happening for several days and then break out, or remain there doing the same thing for some more days before it moves up or down, right? So maintaining that 17,500, 37,500 on the indices is very crucial now, and maintaining about 200. That is important. Even if there is a correction now, again coming back, and again the lower high on the should not get formed. So market has to move above the 18,350 and this is 38,500 kind of levels, right? That's very important to look for the rally to continue. Otherwise, it may be consolidating within the same range. So already has pulled up, but you have to be cautious, as I said earlier, because there is uncertainty. War and peace talks are still happening. War is still happening, right? So market has digested the news, and then VIX has fallen down. But any escalation of that again can cause the VIX to spike back to the 30 in a matter of few days, or an overnight. All this can happen, so you have to be cautious. Positive factor is that it is a big recovery that has happened, right? In a matter of 2 or 3 weeks, 15-20% of recovery has happened. That shows that confidence in the retail population, even when the Fyers are buying or selling like anything, right? So VIX is cooled off, so you have to be cautious, right? So always overnight positions. If you are carrying forward positional strategies, then make sure that you have horizontal spreads, vertical spreads, and non-directional strategies. Whichever is having a hedge risk-defined positions is what you have to do. Otherwise, it can wipe out your capital, and you'll not have anything left for the next to take the next trade. So have your capital intact is the main thing. Risk management is the main thing when you're doing trading. It's not much more important than psychology or much more important than the technicals, right? So that's a wrap up. That's the view I have. Cautious bullishness with some sideways price expectations, based on all the charts and momentum and trend and Bollinger Bands and support levels and all this what we have studied, in the previous slides. My view is this. You may have the same view or a different view. That's up to you. But yeah, so if that helped you to frame your view for the next day and your plan for the trading plan for the next day, then consider hitting the like button and share it to maximum. We have very few subscriptions. Appreciate your help in this regard. Thanks for watching. Happy trading. Bye.